Has the recent tumult in the US stock market left you scratching your head? You're not alone. In a chaotic week, the Nasdaq fell roughly 5%, the S&P slipped below 5,000, and the Dow remained flat. Let's delve into this, shall we? First up, Silicon Valley Bank's collapse. This financial earthquake has been attributed to the bursting of the so-called everything bubble that has held sway over markets for the past decade. The bank's stock took a nosedive, plummeting over 80% and erasing a staggering $55 billion from top Wall Street banks before regulators stepped in to shut it down. The trigger for this financial landslide? Steep losses on the bank's bond portfolio, courtesy of the Fed's aggressive rate hikes. This event signifies the end of an era of loose financial conditions and rampant asset price inflation. Notable critics, including legendary investor Jeremy Grantham, lay the blame squarely at the Fed's door for creating and now attempting to deflate these bubbles. With the Fed signaling even more rate hikes on the horizon, the risk of a significant stock market crash is looming larger, with predictions of a potential 20 to 30% decline in stock prices in the coming months. Yet it's not all doom and gloom. Some economic indicators suggest overall stability. GDP growth, low unemployment, and rising wages are all positive signs. While some experts predict a major market downturn due to factors like inflation and higher interest rates, others believe the current volatility is a natural correction. The recent decline in high-flying tech and pandemic-related stocks has certainly increased bearish sentiment. However, the overall market indices have remained relatively stable. The effect of rising interest rates on speculative businesses remains uncertain, and historical trends show that US stocks have been up in the majority of years. Current market fluctuations may be attributed to the flushing out of speculative investments and increased computer-generated trading. In summary, we're witnessing a period of considerable turmoil in the US stock market. Silicon Valley Bank's collapse and the subsequent fallout have raised some serious questions about the future of financial markets. Yet, amidst all the chaos, there are positive signs and differing opinions about the road ahead. While we can't predict the future, we can certainly observe, analyze, and learn from these tumultuous times. Remember, the world of finance is always in flux. It's part of what makes it so fascinating.